see.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. The probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up. And now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Chip makers, the unsung heroes behind our devices, are emerging as the vanguard leaders of this transfer of information, and companies like Nvidia and Broadcom are at the forefront, laying the groundwork for a new era dominated by artificial intelligence and infrastructure. The tech industry is undergoing an exciting metamorphosis that is poised to redefine the digital landscape as we know it. Insights from a fascinating interview with Howard Chan, the founder and CEO of Curve Investment Management, show that these tech titans are preparing for an unprecedented surge in demand. There is a lot of talk in the investment community that these hardware giants are not only addressing the current seismic shifts head-on, but are actively creating the future playbook in silicon. Are we seeing the beginning of a silicon revolution? Investors in gold rush tech are eagerly awaiting the drama that will play out in this high-stakes arena. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Shares of Nvidia are bouncing back pretty strongly today, up nearly 4.5%, but they're still down 7% from their November highs and on pace to break a 4-month win streak. Comes as Broadcom is having its best month ever and has outperformed Nvidia by 30 points since reporting earnings last Friday. So what's the better bet from here? Our next guest has a buy on both. Let's bring in Vijay Rakesh, senior semi-analyst at Mizuho. Exciting times here, Vijay. It's great to have you. And are you in the kind of everybody can win camp here, or is Nvidia's kind of moment as the most important stock in the market over?
Yeah, thanks for having me on, Kelly. So I think if you look at NVIDIA and Broadcom, we like both. Obviously, both have been top picks for us, and both have done well this year. I would say valuation-wise, they're about the same, but I would say NVIDIA is very well owned. Everybody has NVIDIA. They are the king on the AI side. They dominate the market. They're almost running at $100 billion annually in data center revenues. Broadcom, on the other hand, is just starting to put up massive numbers now. I think we like the name. We have a huge ramp coming up over the next 2 years. It's very under-owned. People were cautious heading into earnings. And so we think there is probably some more legs left to the run there.
Investigating this story further reveals that the rumors about Nvidia and Broadcom are not merely market rumors. Rather, both businesses are positioned to profit from the AI wave's extraordinary demand for processing power. While everyone was staring at software unicorns, a storm was quietly brewing in the silicon foundries. Investors were licking their lips at the juicy prospects, and bystanders were wondering if they should have held on to those old CPU jokes. You know, the ones about how many chip makers it takes to change a light bulb. More. Howard Chan emphasizes this point by pointing out that the sector's current and future capital expenditures are primarily focused on hardware and infrastructure. The light bulb has already been programmed to replace itself. However, some industries may be struggling due to the high interest rates. Despite the volatility, tech giants like Nvidia and Broadcom are unaffected and continue to display strong balance sheets that demonstrate resilience. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial.
A lot of people said, I had no idea, about Broadcom. So you're right. It's going to take a little while to penetrate the consciousness. Maybe that's a tailwind. What about NVIDIA?
Yeah, I think NVIDIA will do very well. I think what we saw in the last 2 weeks is a little bit more, I would say, people getting excited around quantum compute. And so you saw a little bit of a softening on NVIDIA and a little bit some of the focus moving to the quantum computing names. So that said, I think NVIDIA is still, the leader on the AI side by far. They dominate 90% plus of that market. And that's a market that's growing 90 billion, 100 billion this year, going to almost 160 billion plus next year. So massive market for NVIDIA, and they dominate that. So we continue to like the name. I think maybe it's a little bit of a pause, but not a name to be let go. I think this is going to be a huge name for 2025.
You have a $175 price target. One more question on this, and I want to ask you about Tesla. But in the case of NVIDIA, do you think that there is a shift going in the AI world? And maybe you know more about what's going on, sort of the latest of what's going on than I do. But is there a pivot where it's gone from this kind of massive rush to build out these huge data centers and just do huge model pre-training to inferencing and time test and compute and all of that? And does that actually, lesser favor or require NVIDIA?
Not really. I think when you look at inferencing, it's already 40-50% of the workload. And when you look at NVIDIA, their GPUs can be dynamically shifted between training and inferencing. The hyperscalers can allocate whatever capacity workload they want to training during the night and inferencing during the day or however they want it. But it's very fungible. But you will see inferencing continue to grow. And that's why there's a little bit of an opportunity for custom silicon as well, where you see Broadcom and others start to gain some traction.
Yeah, Marvell as well.
The second quarter of the fiscal year, according to Howard Chan, is a critical time because EPS growth is predicted to reveal startling trends. Even the skeptics are intrigued by this prospect, and the NASDAQ 100 is reflecting this excitement as tech valuation soars through the symbolic ceiling. A 21% consensus in EPS growth, up from 15% this year, is no small accomplishment. But it's important to remember that this is nothing new for these titans who have continuously dazzled markets for more than 20 years. And the influence of AI extends. Chan's work in technology has an impact on various industries, such as biotech and construction. Simply said, the substantial impact of this technological revolution is demonstrated by the ROI in productivity in service industries and the indirect spillover of AI investment into non-tech sectors. AI is not merely rewriting the rules, it is writing new chapters. Nvidia and Broadcom's dual roles as suppliers and beneficiaries in this high-demand ecosystem are what make this story so captivating. In addition to meeting present needs, they are also the architects laying out the future and painting the tech world with the allure of silicon gold. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Nvidia here for a minute, because I'm going to ask you the same question I asked somebody else on this show last week. I was speaking to a founder of an AI company that is really ground level when it comes to all of this Gen AI application adoption, the LLMs and the creation of them. And this person said to me that they think that the world is much more close to being oversupplied in GPUs than everybody realizes, or at least investors realize, and that 2025 could be a year where you see a dramatic swing in light of that. Flash forward to a couple of days ago, Satya Nadella from Microsoft is on a podcast, and he says, power, yes, constrained, quote unquote, I am not chip supply constrained. Is there a possibility that we actually see this shift next year? And if so, is that part of why we're seeing Nvidia sell off right now and that rotation into other names like Broadcom, as some investors are anticipating this?
Sure. No, Morgan, that's a fair point. But I think what many of these customers or partners are looking at is the situation when it comes to Nvidia's Hopper product, right? You know, Hopper came out 2 years ago. And we are just at the verge of making the crossover to Blackwell. Blackwell is just starting to get shipped, and it takes a minimum of 2 to 4 quarters, right, for customers to get their complete allocation. So it's very hard to see how they are overstocked when they have yet to deploy their first cluster, right, with Blackwell. The second very important thing that I want to mention, right, which is something that came out on Broadcom's earnings call, is they are saying that we have line of sight to multiple hyperscale customers who want to build clusters that are 1 million accelerators each. You know, the state of the art today is a cluster that XAI is building that is only 100,000, going to 200,000, then maybe 1 million. And Broadcom is saying we will see multiple million unit accelerators. That suggests that the market for training could last much longer and be much bigger than we think over the next few years. So what you said makes sense, I think, for NVIDIA's prior generation product, but Blackwell, they have just started to ship. And that's why it's hard to see that being overstocked anytime soon. And it's back to the point I made before, that it's execution on Blackwell. The day they get Blackwell out and it is shipping without any hiccups to all these customers, I think interest will come back to NVIDIA just as quickly as it is.
One thing becomes abundantly evident as the dust settles on forecasts and analysts examine their charts. With strong market projections and an ever-growing AI footprint, Nvidia and Broadcom are unquestionably at the top of an exciting tech wave that isn't going away anytime soon. Investors may be on the verge of a fantastic opportunity. The stocks of these trailblazers are incredibly resilient, with their consistency and potential appealing to both the cautious and the adventurous investor. The upcoming quarter promises crucial insights and impactful growth. Current trajectories and forecasts signal a promising elevation in their positions, making them not just players but pioneers in this new era. Maneuvers. Those who are keeping a close look may recognize that making an investment today could potentially lead to an investment in the digital gold mine of future. Finally, if you want to know what companies like Nvidia have been up to these past few days, click on the next video on your screen. I hope to see you there. Are you prepared to participate in this exciting journey, or will you be watching from the sidelines as these tech titans redefine what's possible in today's digital ecosystem? Share your thoughts, and let's continue the conversation about the future of tech.